They're the crown jewels of all Gulf economies. But now several Middle Eastern states want to sell off parts of their oil industries, led by Saudi Aramco's record-breaking IPO plans. Others like Kuwait, Oman and Abu Dhabi are also eyeing public listings.
The oil companies are traditionally viewed as state-dominated, where the ruling family calls the shots, and they're less run as businesses and more as political tools. So even in a limited form where they might privatise a portion of the companies, this will be a step in the right direction. But they'll have to change their governance models and the way they run the business.
Saudi Arabia is hoping to raise as much as $100 billion through the sale of around 5% of Aramco next year. ADNOC, which is owned by the Abu Dhabi government, isn't willing to give up as much control. It's targeting an IPO of its retail arm, which is expected to raise a more modest $1.5 to $2 billion. Aside from attracting investment into the industry, the plans are part of a wider privatization drive across the Middle East, as countries here try to come to terms with lower crude prices.
These possible IPOs are also being seen as welcome news by Gulf stock markets, many of which have been pretty sluggish in recent times. Here in Dubai, for example, the DFM hasn't had a new listing in almost 2.5 years.
Unsurprisingly, most of the companies want to go public in their home markets before looking at international exchanges. That could improve standards here as well as investor sentiment.
The whole sort of capital markets agenda is really around deepening those capital markets and giving investors more choice in terms of different segments to invest into. But not only that, what they're also bringing into the frame is really transparency and governance. They want to promote that kind of transparency and governance.
Given the size and complexity of the listings, industry sources expect ADNOCs to surface towards the end of this year, with Aramco's planned for 2018. As with much of what's happening in the Gulf region right now, the offerings are likely to have a lasting impact, not just for regional markets, but for economies that have long been fueled by oil. Nawied Jabarkhyl, TRT World, Dubai.
Joining me now live from London is Dominic Dudley. He's the editor of the Gulf States News website. Dominic, great to have you with us on Money Talks. Let's start with these minority stakes that are being sold by some of the Gulf's oil and other companies. They may generate tens, perhaps in the region of hundreds of billions of dollars. We're not entirely sure yet, but will they have a significant long-term impact on their budgets if oil prices still stay where they are?
Well, some of them may be in the hundreds of billions range, but most of them are probably going to be a lot smaller. And they won't have a big long-term impact just because they're one-off events, really. They'll help reduce the budget deficit in the year that they're sold and the receipts come in, but the next year there won't be the equivalent amount of money. So the only way there will be a long-term benefit is if the governments keep on selling off chunks of their businesses in the future. So they might decide once these initial IPOs are gone that they might line up others to take their place, but that's the only way they'll keep the money flowing in.
So that begs the question then as to how much demand is there out there in the international markets for these kinds of asset sales?
Well, there is a lot of interest, but the demand will depend on the pricing, really. These companies aren't very transparent at the moment, so once the prospectuses are released, then people will be poring over them and finding out just how robust the businesses are. And if the share pricing can be pitched at the right level, then the demand will be there. But there's a lot of question marks over what the pricing is that they'll be looking for. The Crown Prince of Saudi Arabia, Mohammed bin Salman, has talked about a $2 trillion valuation for Saudi Aramco, and according to most analysts, that's simply unrealistic. So if he wants to get that IPO away, he'll either probably have to compromise on the price or put up a bigger amount of shares for sale if he wants to get the sort of revenue that he seems to be targeting.
Dominic Dudley, Gulf States News in London. Thank you ever so much.